Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. US market continues to trade higher, S&P setting new lifetime highs. And so, this is all against the backdrop of obviously Mr. Trump winning the presidential election. Well, most analysts and economists thought that would be pretty negative for the share market, but it's really proved just quite the opposite. Next test will be the unemployment data. If that's around sort of 150,000 jobs created, then you really expect the Fed to increase rates here in December, and it'll just be very interesting again to see the accommodating sort of commentary and see really for the projections for sort of 2017. Certainly with Mr. Trump winning the presidential election, it's viewed as possibly a little bit inflationary, certainly expansionary for the economy. He will be a spender, plenty of infrastructure projects, etc. And it's just going to be interesting to see the sort of forecast for the Fed over a period of 2017. Just on that infrastructure though, it's going to be interesting, the numbers being talked around really are pretty mind-blowing. Talking about $1 trillion. But that's not an overnight fix. If you're looking at building a bridge or improving roading, etc., it's not an overnight fix, and it's probably sort of end of 2017, more than likely end of 2018, before you start to see any real sort of concrete evidence of this sort of infrastructure spend taking place. Interesting as well to see the people that President Trump is talking to in regard to sort of forming his cabinet and his sort of closest advisors. One name has sort of popped up pretty sort of prominently has been Mitt Romney. Mitt Romney was obviously quite a harsh critic of Donald Trump during the election campaign, but really, President-elect Trump appears to be sort of trying to smooth any sort of cracks in the party, and also as well trying to unite the country together. So it's just going to be very interesting to see how that sort of all pans out. Big meeting coming up for OPEC November the 30th. Still trying to sort of hammer out a deal. Oil at the moment is sort of just come off those sort of highs of above sort of $50 a barrel, and it's just going to be interesting really to see if they can get that deal sort of hammered out, and then also as well to see if the oil producers will actually adhere to it. One final thing to note, is quite interesting. Interest rates appear to be sort of just firming up a little bit. It's quite interesting in the US over the last sort of 3 to 4 months. The 10-year has moved from around sort of 160 to just over 2% now. That's quite a big move, and it's going to be very interesting to see how that sort of pans out into 2017. Here in New Zealand, again, pretty interesting with interest rates. Since the OCR was cut down to a record low of 1.75, the actual sort of term rates, sort of 1 year, 2 years, 3 years, etc., haven't actually reduced very much at all. If anything, they've actually sort of stepped up a couple of basis points. Now, New Zealand economy is actually, growing at a pretty reasonable rate. You've got a pretty reasonable GDP. You have a further improvement in the payout for the dairy sector, and that really should start to filter through to the economy. So the big sort of question mark is obviously the earthquake down in Kaikoura, and just sort of seeing what the economic impact of that is going to be, and also, how long it's going to take to sort of fix. One thing for sure, it's not going to be a quick fix. Now, obviously, New Zealanders still looking for income out there. As discussed, there are plenty of options out there, and if you're interested in discussing what options are available in terms of dividend shares, etc., call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.